This episode is brought to you by High Vibes Norwalk, conveniently located inside Crunch Fitness in Norwalk, California. Stop by and get your pre-workout energy teas and post-workout protein shakes. Go follow High Vibe Norwalk on Instagram. Sista C.
Brotha Adam.
Look at us, new studio.
Look at
good
this.
energy. How you feeling?
I'm feeling good. It's nice in here. It looks good in here. What more can we ask for?
I love it. I love it. So listen, when we first started, set this off, we had talked about how we want this to look and how we want it to be structured. And ultimately, we wanted to get to a point where we're able to bring on guests.
Yes.
People that we thought were dynamic, had great stories, or had good information that we thought people should know about.
Absolutely.
We both decided to go into our Rolodex of people and then tap into our network. And so for me, this guest was at the top of my list. So I'm super excited to have him on.
Me too.
This guy is a father. He is a husband. He is a teacher. He is a life coach of sorts, helping people with wealth building. And one of the things I don't think he knows, but when he's not in the room and his name comes up with our friends or people that we know, it's always one common denominator. That seems a good guy. He's a good guy. You know what I mean?
Yeah.
So with no further ado, let's welcome to the podcast, Rasheme Ellington. Just two Scorpios first guest, man. We appreciate you, sir.
Man, thank you. That was a great little thing to hear when I'm not in the room, too.
Man, it's always good to hear people speaking highly of you when you're not there, right?
What a beautiful thing.
Man, we appreciate you coming in, sitting with us, having you here, man. This means a lot to both of us, man.
Absolutely.
Well, it means a lot to me for you guys to put me at the top of your list and have me here. So I'm really excited about it. I'm really grateful. So
Thank you. Just really quickly, do you mind just giving people a brief intro? Where you from, your education, how you ended up doing what you're doing now?
Yeah. So grew up in Carson, California.
Oh, shout out to Carson.
Shout out to Carson.
Shout out Carson.
Yeah. Oh man, great family life. The youngest of five, and the baby boy of the family.
Okay.
I was the one that after they made all the test runs with the oldest, they figured it out by the time they got to me.
Okay.
I had a chance to go to some really great schools that were a little bit out of the way. I had a chance to go to college at Cal State Fullerton.
Shout out Titans.
Shout out to the Titans.
Yep.
And I graduated in advertising because I wanted to do commercials.
Oh, nice.
Okay.
In front of the camera or behind the camera?
I wanted to create the jingles. I wanted to make, I loved commercials that can make you laugh but send a message.
Yeah.
Okay.
And that was what I wanted to do.
Gotcha.
That did not happen. But I ended up falling into something that was even more magical, which is just teaching chess to kids.
Nice.
Which is a family business. And,
dope.
Been doing that for over 20 years. And then, education was a natural part of what I did and ended up rolling into, learning about how money works.
I love it.
Okay.
Yep.
And that became an intricate part of my life. And so those are the fundamental building blocks to what I do.
Oh, nice.
Education.
I love it.
Yeah.
All right. Well, we pay a lot of insurance, see? Your car insurance?
Pay car insurance.
You got health insurance?
Health insurance.
You got home insurance, renter insurance?
Yes.
There's all these insurances.
Wait a minute. I even have phone insurance.
And phone insurance. We pay insurance for everything.
Yes.
Some of us don't feel like we're getting our money's worth with their insurance because insurance is a thing you can keep paying forever and you never utilize it.
Right.
It feels like that, right?
Can.
Until something happens. We brought you on today, though, to talk about some life insurance and some other like wealth building opportunities because life insurance has some complexities to it where it could be layered and structured differently and some huge benefits that I feel like maybe most people don't know about.
Agreed.
So we thought, man, what a great opportunity to unpack some of this knowledge that you have.
Yes.
Yeah.
And give to our listeners as well.
Yes.
So I guess first question really is, why life insurance?
Why
Tell us
life
about it.
insurance?
Tell us about it.
Let's dig in on that because I do think there is like, you say life insurance to people, especially, and I think in our community, there's an idea that they automatically get that they don't need it.
Okay.
Right? Or don't want it, or like you mentioned, maybe a lot goes into it, nothing comes out, maybe.
Right. Okay.
Right. So my first question I'm gonna throw back at you really fast is when you think about money, if I say money is, what's the first word that comes to your mind?
Go ahead. Ladies first.
Money is
Money is
something we spend every day. We use it every day. We need it. It's a necessity.
I like it.
okay.
Money is a life source.
A life source?
Yeah.
Keep going. Just
Money is it's a function.
function.
Okay.
It's a tool. It's
Tool. Boom.
a
All right, I'm
tool.
gonna go right
There
there.
you go.
Because that's the word.
Okay.
None of your other answers were incorrect,
Okay.
but when we think of it as a tool,
Mm-hmm.
then now we can actually start putting things in the right perspective.
Okay.
Okay, because it's all mind.
Okay.
All right, how you look at things, your perspective will shape your reality. So if we say that money is a tool and we're talking about life insurance, then we're talking about another tool that we can utilize to produce wealth, to change the trajectory of our family's wealth or goals down the line.
Yeah.
It's just a tool, right? So that's one.
Mm-hmm.
Okay. Life insurance, I say, has two aspects. One, we look at it when most people think of it, there's like life insurance and there's death insurance.
Life insurance and death. Okay, break that down for us.
Yeah.
When you think about, when I say death insurance, it's the idea of I have coverage on myself so that when I die, I will pass on money.
Okay. Okay. That makes
Life
sense.
insurance gives me that benefit as well, but it also says this is something, a tool that I can utilize while I'm living.
So for those that don't know,
Mm-hmm.
and just so for clarity's sake, so when I think life insurance, I don't know
Yeah.
about you, Sister C, but I usually thought like, okay, I need this in case something happens to me and I
Right.
die, right?
Yeah, this is what I'm thinking right now.
Yeah.
Yeah.
But you're saying there's life, and so that's more of a death benefit, what we're thinking.
Yes.
What I think most people think.
Right.
So there's two separate ones, life and death.
There
Okay.
really is. There really
Okay.
is.
Break that
yeah,
down
please,
for us.
please.
Let's go into
I'm
it a little bit.
intrigued now.
All right, good.
Okay.
Good. All right. So let's talk about life insurance.
Okay.
Let's talk about the things within it that we could utilize while we're living. So we could utilize life insurance to actually grow wealth.
Okay.
And we're going to unpack this a lot more as we go along, but there are actually products out there where you could utilize cash value.
Okay.
So for example, we stuff a lot of money into the life insurance.
Mm-hmm.
Okay.
It's usually tax exempt money that can grow with the extra benefit of never losing the money. Meaning,
Okay.
So
tax exempt, I love.
okay,
Those
right
are one
there.
of those words for me that makes me smile
Yes.
because we have insurance on it. We pay taxes on everything.
Everything.
We get
Right.
paid, they take tax out. I go to the
Absolutely.
store, spend money, they take tax out.
Yes.
I go get gas, I'm taxed.
Yes.
Everything you do.
Now,
Everything.
for people that don't know, tax exempt, you're saying I don't have to pay taxes on this money.
Yeah, that's what I'm saying.
Really?
I'm saying that the money that you've already put into this account has already been taxed.
It
most
already been
likely.
taxed, yeah.
So the fact that it's growing now over the next 5, 10, 20 years, however long, whatever it grows to, I'm telling you, you get to keep it all and you don't have to pay Uncle Sam a dime of it. It's all yours.
Legally.
Legal.
Okay. Disclaimer legally.
This is legal.
Let me ask you, am I able to withdraw from this account?
You are absolutely able to withdraw from this account
Before you die.
before you die.
Tax exempt.
Tax exempt.
Wow.
Life. That insurance is giving me life.
That's
Not death.
life.
Yeah, that insurance is giving me life.
Wow.
That's
Okay.
life. And that's not the only thing. So there's many more intangibles that go along with that. But if somebody were to utilize this vehicle, they have the proper structure, they can actually accumulate a lot of money over time, right? And we'll get into the whole compound interest aspect of it.
Okay.
But the very fact that these are usually indexed accounts, now to be clear, they're not the money that you put in is not invested into any particular stocks or anything like that.
Okay.
But it's growing in an account that mirrors, let's say, the global market or the S&P.
The S&P, the top 500 companies that people can invest, throw money in.
That is correct.
Okay.
Wow.
Yes.
Okay.
Okay. So now
So this life insurance, you're actually investing into the market.
you're actually yes.
And
It's mirroring
It's mirroring that.
the market,
Okay.
right? So it's usually a floor and a cap.
Okay.
Okay. Let's say that the caps are around 11, 12%.
Yeah.
Okay.
And that just depends on what company. And there's many companies that do this, right? That offer these particular products. And let's say that the floor is something like 0% or 0.75 or something around there. Meaning when the market tumbles down, You don't lose anything.
Oh.
You get a base 0.75, for example, if that's the floor, no matter what.
Wow. Okay.
Negative 5%, you get 0.75. Negative 20%, you get 0.75. Now, if the market goes up, you get all the way up into that cap. So if it goes up 10%,
so if the
you get
market
10%.
goes up 20%,
Yes.
I might be capped off at just 11%.
Exactly.
So I can't make all that money. But I'm safe because you guys, if the market goes down 20%,
Yes,
my account, I still get 0.75.
no matter what.
This is
Nice.
interesting.
That's nice.
This
Which
is interesting.
Follows Warren Buffett's 2 very important rules. Rule number 1, don't lose your money.
Uh-huh.
Rule number 2, don't forget rule number 1.
I like that.
Yeah.
I don't like losing money.
Nobody-
I like both of those
Yeah.
rules. 'Cause
Nobody
I don't like
likes
losing money.
Exactly.
All right. So
Absolutely.
somebody comes to you. Me and C come to you. Just for this, hypothetically, we're
Okay.
married.
Mm-hmm.
And we say,
Oh.
you know,
Oh.
you okay, babe? Okay. Okay. And then I say, we're interested in life insurance.
Yeah.
And even maybe some death insurance, because those things are important too, right? Where do we start the conversation with you?
Right.
What are some of the things you start to what are you trying to figure out about us to figure out what's the product or the thing that we need that's going to best serve us? Like, what are some of those questions?
Okay, that's great. So first of all, like you said, death insurance is very important. I'm gonna start there.
Okay.
You got to pay to come into this world.
Yes.
You got to pay to leave this world.
Facts. Very
There's no
true.
way
Okay.
around it.
Yeah.
All right. Most people pass on debt. Most people pass on useless things,
Yeah.
or sometimes even put their families behind even more.
Mm.
We've seen people on the streets, I don't know how many times, with GoFundMes and different things like that.
Yes.
This is a
Yes,
very
sir.
real thing,
Mhm.
Yeah.
right? So this is a great way to pass on wealth,
Okay.
first of all. So now if I'm sitting down with the family, I definitely want to take a holistic approach.
Holistic.
Yeah.
Okay.
What does that mean?
So
Yeah.
for
Like, how
me,
are you using
is it-
holistic with this?
Yep.
Yeah.
So when I say a holistic approach, I'm coming from the mindset of I want to look at the entirety of your situation.
Okay.
And I want to start with the mindset
Okay.
because I want to know how you think about money, like what comes to mind.
That's great. That's a good question.
Mhm.
Yeah.
Right? We can either have money be our master or we can have money be our servant.
Mm.
Okay.
And so I want to get in the mind a little bit, see how our thinking is, right? 'Cause
Okay.
our belief systems are going to drive our decisions no matter what I say.
Okay.
And then I want to give some basic education on how money works.
Okay.
I want to talk a little bit about compound interest. I want to talk a little bit about time, understanding that aspect.
Huge.
I want to talk a little bit about taxes.
Okay.
I want to talk a little bit about compound interest and different things like that. And then what I would do is I would sit down with this family after giving them a little brief education.
Mhm.
I would get into their world. What's coming in? What's going out?
In terms of money, like how much money do
Income,
we have coming in every month,
expenses,
and then what we're spending that money on?
habits.
Oh, gotcha. Okay.
And I say this because when there was a guy, his name was Cash, he sat down with me. And he did what we call a financial needs analysis.
Fine. Okay.
Okay. So he analyzed
Okay.
my finances.
Yeah.
And what was shocking to me was, after he took in, okay, what income do you have coming in? What about your wife? All right. What expenses do you have that's going out?
Gotcha.
All right. After we did all of that, he was like, well, you should have, about $4,500 left over after everything.
4,500.
Yeah.
Really?
And this was
you and wifey doing good. Shout out to wifey.
Yeah.
Shout out to Coley, wherever you are right now, y'all.
Don't give me too many props yet.
Yeah.
Y'all doing all right.
At the time,
He
I
said
was like,
4,500 left over.
I
See,
know,
left over.
That's a hello for me.
that's
Yeah.
a beautiful thing.
Yes. It's a great
if that was the
situation.
Your
case.
DM's about to
Yes.
light up right now.
Yeah. He said, what's left over? After
Left
everything's paid for?
Oh, yeah. That part. I'm
Okay.
like, there's no way that's happening. Like,
Okay.
Yeah.
I never have
That would be nice.
4,500 left over.
Okay.
Never.
So when you're doing this with families, are people usually shocked by how much they have left over? Like when you break that down?
yeah,
Really?
I would say 50-50.
50-50, okay.
I would say 50-50 because you have cases like me who I had a bunch of habits that I just wasn't realizing.
Oh, gotcha.
Absolutely.
And so it made me think, oh, wait, I guess I do have money going out here. I didn't even really calculate that. I guess I am spending a lot of money every single week on entertainment.
Yeah.
Didn't really think about that.
That's the
I guess
one
I
that
do
eating
spend
out,
a
that-
lot
yeah,
of
been out-
time
been
at
outside.
the mall.
Yeah.
Right? Like
Yeah.
my wife is not the shopper in the house.
It was you.
It was me.
Gotcha. All them
I
fancy
had a
hats. All
shoe
them,
addict, bro.
all them fancy hats
Oh.
cost money.
Let's not talk about the shoe
The
addiction.
shoe addict was real.
See, do
Yes.
you feel like you know how much money you got going out every month?
I do now.
Oh, you do have.
Yeah,
Okay, you have a
yes,
good idea.
I
Okay,
have.
that's
I-
good.
I slowed down on my shoes.
Oh,
my
did
my
you? Okay.
biggest expense was my shoes.
Okay,
shoes.
okay.
I have a ridiculous amount of shoes, and
Uh-huh.
I just ordered shoes because they were about to come out.
Gotcha,
and they're
yeah.
sitting in my closet.
Sitting.
Okay, all right.
So I have to slow that
So
one
you
down.
hit people with some real, very honest news. Like, here where your money's going,
Yeah.
and it should not be going here. Let me show you how to put your money in this thing
Yeah.
where it could start to pay off for you.
Yeah.
Okay,
Actually, I really let them come to that conclusion by themselves.
really? Okay,
Yeah. Because now it's
How
like,
so?
so after we dig in on all of that and we see what they have left over,
Mhm.
the question is, what do you do with this?
Mm-hmm.
That
What
extra.
do you do with that leftover money?
Yeah.
What are you doing with it?
Mm-hmm.
Right?
Mhm.
And you know, we can create ways to let our money work for us.
Okay,
And now it's like, okay, well, we see the position that we're in now. Is this where we want to be in 15, 20 years?
yeah,
Right.
And usually it's like, no, I mean, if
Absolutely
if
not.
I continue at this pace,
Mm-hmm.
yeah.
then I'm going to find myself in a real predicament.
I'm working forever.
Mhm.
Yes.
I'm working forever.
Forever.
How old were you when you realized you couldn't work forever? Because I feel like it hit me at like 40, where like I had older people in my life trying to pull me aside, let me know about, hey,
Yeah.
make sure you put money into your retirement accounts and your 401k, and you're saving money today because
Yeah.
it'll save you later.
Mm-hmm.
But you know, when you're 20, you think you're gonna live forever.
You don't care.
You think that sounds so far away. I got all this time. Like,
do not
I do not need
care.
to do it right now.
No.
Yeah.
I remember being a young adult and having my first job, and they told me about 401. Hey, put this much amount in your 401. Okay, my check is going to be about $700 without 401.
Yeah.
Right? But if you start investing a certain percentage in your 401, check's starting to look around $500.
Yeah, you like,
so you
what?
got to just take 200.
Right.
I didn't even say nothing about Uncle Sam yet.
Right.
So Uncle Sam going to get his part too.
Right.
So I'm about to be left with like 400.
Right.
No,
Nah.
401 is not important right now. No, it's not.
But then what happens is like you realize you start to age. Like, you know, at 40, you know, you roll up out the bed and things hurt that didn't used to hurt.
Yes.
Yeah.
You look in the mirror, these grays start popping up.
Yes.
And then I feel like most of the people that I know around our age, nobody enjoys going to work anymore. Unless you have something that you absolutely love.
Right.
The reality sets in where it's like, man, I don't feel like doing this.
What is that?
But imagine that alarm going off
Mm-hmm.
and you're 70 and you have to get up and go to work.
Oh my goodness.
That hurts.
That's
That
terrifying.
hurts.
Phew.
That's
That
terrifying.
hurts.
Right? Because I don't like
That's a
I
harsh
don't like when my
reality.
alarm go off right now. I'll be like,
Right.
I gotta get up and go to work.
And then get up and step out of bed and your foot hurts.
Right.
Your knee hurts. You're aching. Just imagine a
Yeah.
70-plus-year-old person going through those same ailments. Right? That's tough.
So they come to that reality that like, hey, I need to make sure I got something put away so I'm not having to work forever.
Yeah. Some do.
And so now you start explaining, you said the compounding,
Yeah.
you have a great question that I love
Yes.
about it's the penny.
Yeah. 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 So I'll ask just to see here. If you had a choice,
Okay.
I came to you, said, look, I can give you $1 million right now.
Okay.
Cash, it's yours. We shake hands, we go our separate ways. You do whatever we want.
You just
with your
gonna give
money.
me $1 million flat
1
out.
million flat
Oh.
out, tax free.
Tax free.
Tax free.
Gonna run me my $1 million.
Wait,
man.
or
Oh, it's an or to it?
there's
Okay.
an or.
All right.
Or I could give you a penny today.
All right.
Okay. And then we meet again tomorrow. And I'll double that penny. I'll take your 1 penny and I'll make it 2 pennies. And then we meet again the next day. And I'll take your 2 pennies, I'll make it 4 pennies. And we do this every single day for the next 31 days. Mind you, about day 15, 16, you'll have about $300.
Okay. That's a lot
Little
of
over.
calculating.
Okay.
$300, or you give her a
about-
meal ticket.
After 15, 16 days around there, you have
Yeah.
about 300 something dollars.
Just 300?
But I'm going to do this for 31 days.
Okay.
Would you take the million or would you go to 31 days with the penny double?
Let me calculate.
Yeah, do
Let me
that.
see.
Break that hand calculator out.
That seems like a lot of work. I don't really want to do the work. Just give me the meal ticket.
Just take the meal, right?
Just give me the meal ticket.
Yeah.
I'll take the $1 million.
Now, let me just jump into this real quick, because this is exactly what most people are thinking. It's the microwave society that we live in. Just give it to me right now. I don't want to do the work. That sounds like too much.
Sounds like that instant
And I gotta wait
gratification.
31 days?
Yeah.
Right.
Now,
instant gratification.
Instant gratification.
Yeah.
The problem with it is, if you take the $1 million, you're going to miss out on about $9 million. Because after 31 days, that penny doubling compounds to over $10 million.
That's insane.
Exponential growth.
That's insane.
So it is insane.
Yeah.
And this is why we have to talk about, compound interest and saving over time.
So even though I knew the correct answer, because we've had conversations about it before, the math still doesn't sound like it's mathing in my mind.
It's not mathing.
Right.
I've been
Mathing,
mathing
right?
since he's been talking.
Right, and
I've
it's
been
like,
focused
why
on
would you giving me pennies, bro? Like,
how we gonna make
even
that penny
even we're halfway
equal
through.
to
We're halfway
10?
through this
Halfway through.
process. I'm only at 300.
Yeah.
Where I could have been. I could have took this $1 million
How
to the
does
bank
this
and
make
deposited.
sense?
Right.
Yeah.
But that's why I don't know if it's Albert Einstein. He called compounding like the ninth wonder of the world.
He said it was,
And when people figure out how that works and how that math works, it's such a huge benefit.
it's massive.
So it's compounding, but it's also time. You have to understand the value of time.
Yeah.
Absolutely.
The earlier you start to put this money away, it could grow crazy.
Absolutely.
By the time you are ready to retire, you don't want that alarm going off at 65,
not.
70. When that alarm you could shut that alarm off permanently at 50.
Major key alert.
Exactly,
Yeah.
right?
And what you just said is so real. I mean, and the fact of the matter is, the earlier we start, the better.
Yeah.
And that's just something that, that's what you guys are doing is so important early.
Yeah.
Because the key is to become financially independent, right? And there's multiple ways to do that. And I definitely highly recommend starting a business, because that is another intricate detail to it. And then having your money work for you.
Right.
Yeah. And yeah, it may take a little bit of sacrifice. We're going to pay.
Yeah.
Regardless.
We are.
We pay now.
Or you pay later.
Or you pay later. But you're going to pay.
You
the
are
bill's
going to pay.
come due. So
Yeah.
we might as well just pay it now.
Okay. So now you're sitting down with this family.
Mm-hmm.
You're getting you're doing an assessment basically on them.
Uh-huh.
And then what's the next step? Like, when at some point you're obviously going to say, hey, these are the things that I think like fit what you guys are looking for, right?
Yeah.
Okay.
So I would walk them through this. I'll give you like a real quick breakdown. One, I'm going to bring to their attention that there's a target. There's a FIN number, financial independence number.
Okay.
Now, most people aren't even thinking about that. They're not thinking about how much I'm going to need in 20 years
To stop working.
to get to the
And be
day that I
comfortable.
want to retire.
Right.
Yeah.
To how much money am I going to need to acquire to get from the day that I retire to the day that I expire?
Yeah.
How that works.
Okay.
Okay. So if that amount of time is 20 years, 25 years, 30 years, whatever the case, how much money do you need to get yourself through 30 years of life?
Yeah.
Gotcha.
Okay. So we have a formula to get that number.
Okay.
All right. That's what we do through the financial needs analysis. Now, you have that number, you have a target. If I put you out on the golf course today and I blindfolded you
Yeah.
and I said, okay, get the ball in the hole. Here's your club, but you're blindfolded. And
Yeah.
you have no idea where the hole is. How long
Right.
is it going to take you to get there?
Forever.
Forever.
It's gonna be a while.
Yeah.
It's gonna be a while.
It's going to be a long time. You have no idea where you're going.
Yeah.
Right.
Right. But if I take the blindfold off and you see the pole, you see where the hole is, no matter how good or bad of a golfer you are, eventually you can get the ball in the hole.
Okay. That makes sense.
Okay. So the thing that we want to make clear is, what is our goal? Let's get a clear target.
Yeah.
Because if we have a clear target, we have a much better shot of hitting it.
Okay.
All right. That's the first step.
That makes sense. Yeah.
Okay. And then we look at we talk about compounding a little bit. And a simple way to break that down is the rule of 72.
Yeah.
Which simply says you take the amount of interest that you're making, you divide that into 72. That'll give you the amount of years it takes for your money to double.
To double. Okay.
So
Like
if
the
you-
penny. Like the penny.
Like the penny.
Yeah.
If you're getting 1%, and banks don't even offer you 1%, let's be real. They offer you less if you put your money in a savings account at a bank.
Yeah.
You're 0.002%
Right.
Facts.
return.
Yep.
Put $1,000 in there today, check it in a year, you have $1,000.02. Something like that.
Right.
It's gross.
Sounds right.
Yeah.
Right? So now we say, okay, if you're getting 1%, let's be real, just 1%, that means 1 in the 72 is
72 years.
72. So it's going to take you 72 years for your money to double.
Okay.
So if you have $1,000, you wait 72 years at 1%, then you have $2,000. You excited about that?
No.
You're not going to be able to retire with $2,000.
No.
Well, yeah.
Right? So now if we take 4%, we do the same thing.
Okay.
That was at 18
Okay.
years. So now, I'm just trying to do this math in my head right now. That's every, let's say, 18 years,
Your money will double.
your money will double.
Gotcha.
If you have 10%,
Okay.
then now we're talking every 7 years.
7.2 years, yeah.
7.2. So now every 7 years, your money is doubling. So what we want to do is the higher the interest rate, the more the doubling.
Gotcha.
Right?
Okay.
So that's what we want to focus on, getting a high return.
Gotcha.
Then we want to focus on not losing our money, right? Because we talked about this earlier.
We don't want to take any L's when it comes to
We don't want to take any L's.
No. We don't want to lose.
If we look at that real quick, if I put $1,000 in the market and the market goes up 50%, how much money do I have? I have $1,500 now.
Yeah.
And then the market turns around and it loses 50%.
I got 500 now.
Now I cut that 1,500 in half. I have 750.
Oh, gotcha. I'm sorry. Okay.
So why didn't I go right back to the 1,000 that I started off with? I started off with 1,000.
Right.
Yeah.
I went up 50%. I had 15. Then I lost 50%. I should be back at 1,000. No, because math and money doesn't
work
necessarily
like
work out like that. I went down to 750.
Yeah.
Right. And so that's how it works. The losses in the market always hurt more than the actual wins in the market actually help.
Okay.
So we want to focus on not losing our money.
Gotcha.
Yeah.
That's where the index strategy comes in. And
Index
that's just
strategy.
one strategy for a foundation. I'm not saying that
Okay.
needs to be all eggs in that basket.
So it's not one size fit all
It's
when it comes to
definitely
this.
not.
Okay.
But this is a tool for a great foundation.
Okay.
Does that make sense?
Yeah.
Yeah.
You with me?
I'm following.
Yeah.
I'm learning. I'm learning, brother.
All right,
as we
so-
talk.
Uh-huh.
You know, we're working class, right? We
Yep.
we work together outside this podcast. So, you know, we are fortunate that we are in that class of people that have a 401k. We're one of the few industries left too that has a pension.
Yeah.
Right.
Wow.
So one
Major.
pension, exactly. Pensions aren't guaranteed.
Not at all.
And if a company goes broke, they could just stop paying on your pension, even in retirement.
Absolutely.
Oh boy,
We just saw
Saw
a
that
meme
video?
Yeah.
on Instagram
I
for
felt
the
for him.
yellow truck drivers.
I feel for him.
That man was
30
hurt.
years, see.
He put in 30
Could
years.
you imagine if we was at our spot 30 years and then they said, y'all don't get no pension?
and he took it away. They took it away.
That was painful.
That was hard to watch.
That's too real.
Could you
man.
imagine? And he's up there in age.
Yeah.
Yeah.
You
Now
know,
what?
You can't work another 30.
that's it.
No.
It's
Yeah.
over.
So pension's not guaranteed. The 401k is valuable, but it's going to get taxed. And I feel like that's the thing people don't really know or aren't aware of. You go to retire, you look at your 401k balance, say you had $1 million in there.
Yeah.
Yep.
You're excited. You're like, oh, I'm good. I'm set to
Yeah.
retire.
Yeah.
But that could get taxed 50%.
Yeah.
And so it's like, okay, that's a little misleading when you see the balance because
Absolutely.
it's you're thinking about the number that you see there, not thinking like, oh, I still got to pay taxes on this thing.
Yeah.
But you're saying you have tax exempt products
That's what I'm saying.
that still fall into the life insurance.
This is what we're
piece?
saying. Yes.
Okay.
You just brought up some great points, and this is the reality.
Okay.
Let's just look at first. You have 3 brackets when it comes to the taxes. You have the taxable, or the tax now, where basically capital gains come into place. You earn money. You put money in stock grows. You pay taxes on it annually.
Yes.
Okay. You got mutual funds, you got CDs, you got savings accounts. All those type of things are taxed now. Taxed later, like our IRAs or our 401ks, let's say. It is a bit of some tricking happening there,
Yeah.
right? It seems like the further we follow that thing back to its roots, it was more of an experiment than anything.
Oh yeah.
It seems like it. It
Yeah,
seems
yeah.
like, hey, let's get rid of these pensions and let's bring in this 401k, and the individual has to just deal with it.
It goes back to your golf strategy too, where like we're not traders, we're not finance people by trade,
Right.
but they expect you to be able to manage this account and know exactly what's happening
Yeah.
Right.
with like no classes or anything on the market.
No classes.
So you're kind of left to your own devices
Yes.
to figure it out. Or like you said, they're going to blindfold you and say, get to your FIN number, your financial,
your FIN number,
your financial independence number.
That's right.
Without really teaching you necessarily how to get there.
Think about it. Most people have a 401k that oftentimes don't even know what they're invested in.
Yeah.
Right.
They have no idea of the fees that are attached to a 401k.
I mean, that's a bar. Like, how many people know
Actually
like what you're invested in your 401k right now?
Right.
Can you honestly just answer
can
that
you
question off the top?
Yeah, off the top.
Yeah.
You know, most people don't know.
Okay.
They have no idea about the fees. Even if the fee is 0.5 or 1%, something small, think about that 1% over
the fees also, right?
20 years. So it's like, man, you end up paying $100-something thousand in the fees. When is the
So
last?
I have a question.
Yeah.
So we were talking about the yellow truck driver, right?
Yeah.
Mm-hmm.
So in his case, what could he have done to protect himself from that happening? Could he invested in another means possibly along his 30-year run with that company? What else could he have done to, hey, that plummeted, but he had backup. He had this going.
Yeah.
Do you offer something like that where someone could possibly?
Oh, absolutely.
Okay.
Yeah, absolutely. I mean, that falls inside the bracket that we're talking about here as well. If he were to utilize one of the tools that I'm talking about, he would have had some extra cushion that he could rely on, because it's dangerous to rely on the company
On just one thing.
to provide for us. We're basically putting our
Trust,
and
that's
somebody else's
all the way
hands.
around. Yeah.
So,
well, if you don't mind, let's get to the meat and potatoes then, right?
Let's get in.
We're talking life insurance. So you're saying there's death benefit and then there's life benefit.
Yeah.
So now me and C, we need to put some money into something that's not a 401k and not a pension, but something where we're like, this is going to be safe and secure. What does that look like? What is it like?
Yeah. So if we're talking about putting our money into something that's going to be safe and secure, most people, the first thing that they think of is like a whole life insurance.
Whole life. Okay.
Now, all of these are vehicles. All of these are tools. We have to find the one that's going to work best for the client.
Gotcha.
Right. The one that I definitely do like is the indexed universal life.
IUL is
The
what they call them. Okay.
Now, the reason why I like them, because I feel like if they're actually properly structured for the client, like we sit down and we find out exactly what their goals are, and we don't overextend ourselves, and the client can actually stick to the plan that we write out, they're going to get so many benefits. And I'm just going to name them off. One, you get to put your money into a vehicle that will compound over time with the guarantee not to lose. So you're not falling victim to the downside of the market. That's massive.
That's huge.
Absolutely.
Everything that you grow in this account, you now get to utilize this money tax free. That's massive.
Yeah.
You also get the benefit of being able to put as much money into it as you want, versus if you get like a Roth, let's say,
there's limits.
There's limitations on how much you can actually put in.
Yeah.
So with this, you can dump a lot of money. So when those tax times start coming around, you get that lump sum of money, you can dump it in. Some bonuses, whatever comes along, you can actually, as long as it's structured for that, you can dump in that money, and you have access to it. Now, the idea is it's a long-term vehicle because we're utilizing it for our future.
Right.
Okay.
I don't ever set anybody up with a IUL if they're trying to use it within the next few years. That's not the vehicle.
That's not. Oh, gotcha.
This is a long-term vehicle. And be clear, it is a life insurance product.
Okay.
I don't even want to look at it as an investment product. It's a life insurance product that you can utilize for investment. So there's an aspect of it where you put money in.
Yeah.
There's a portion of that money, a smaller portion, hopefully, structured right, that comes out to pay for the cost of insurance.
Okay.
Why? Because anytime that you have life insurance or purchase life insurance, you are buying money at a discount.
Okay.
You're buying money at a discount. It's a tool.
Yeah.
So now I purchase let's say a $500,000 policy.
Okay.
Over my lifespan. Let's say I never put anything close to $500,000 into it.
Yes.
But when I pass away, I'm passing on that $500,000 to my beneficiary, plus whatever it is that I put into it.
Plus what you put into it.
Plus what I put into it.
Ooh. Okay.
Okay.
Nice.
And so that's that's a great way to pass on some wealth. Now, but how do I utilize it when I'm living?
Right.
Well, the money that I'm putting into it, that's the money that's compounding over time.
Correct.
Right. So now at 10, 20, 30 years or whatever the case, I've accumulated a lot of money in the account. I can now start peeling money out and pay myself income.
Word.
Right.
Okay.
While I'm leaving chunks of the money in to continue to grow.
If you pull that money out, do you have to put it back in?
You do not have to put it back in.
What? Interesting. Okay.
You do not have to put it back in. You pull it out, you go do whatever you want with the money. If you want to put it back in, you can, because after a particular point, it just becomes a glorified checking account or savings account where you can put money in, take money out. Why not dump the money in if I have extra so that it could grow and it's protected?
Okay.
Right? But when I need it, I have access to it.
Wow, that's pretty good. Let's say, for example, you have someone with an old 401 account that's sitting at a company and you just have it sitting there.
Yeah.
Can I transfer those funds? Can I roll those funds over into one of your types of accounts?
Great question.
That
I
is
love
a
that.
great question.
Yeah.
Because some are looking into going into an IRA. You know, instead
or
of
we've
or
all
put it back
changed
and
jobs
forth.
at some point,
Yeah.
right? And then you have this old account that.
Yeah.
Okay.
I deal with that a lot.
Okay.
The answer is yes, you could. Now, then we have to look at the numbers. Is it beneficial to do it? Because when you think about a 401k, it's in a tax deferred bracket.
Okay.
So if you look at it as lanes, you have the
tax exempt,
taxable lane, you have the tax deferred lane, and you have the tax advantage lane, let's say.
Oh, okay.
And to move one from the other is switching lanes. So you're crossing over some borders. There's some rules there.
Okay.
Now, if you have an old 401k, you basically, if you pull from that money early, you know there's a 59.5 rule that apply to 401k.
Correct.
If you pull from it, you're going to most likely pay some fees.
Yeah, they're going to hit you over the head.
Yes.
There is a rule out there, I think it's like called the 72T rule or something like that.
Yeah.
Where during COVID, it kind of came out where people can access their 401ks early and
a lot of people in need at that time,
they needed
right?
that money because they were in situations. So you could pull out a certain amount of money and people could like use that and move it over. Now, but that's something else. Let's just talk in general.
Okay.
That money would need to move to another tax deferred account.
Oh, okay.
Okay.
And there are other tax deferred accounts that are very, very good that will give you the benefit of downside protection. Unlike the 401k, most times if you have a 401k, you earn money, you lose money. You might look at your account one day and it's up, next day is down.
Yes.
Right?
Yeah.
Yes.
So we could move it to an account where you have some guarantees not to lose. Right now, your 401k, if it's old, it's not actively managed. Nobody's looking over that. It's just sitting there, like you said. So we can move it somewhere where it can get some pretty good growth. So now we're talking about creating some growth opportunity, giving yourself some protection. And the kicker is you can actually create a lane where you provide yourself with lifetime income. Now, what are the two reasons, if I just ask you this, what are the two reasons why people invest?
Gain money, right?
Okay.
Get some money in return. Yeah, for
Gain
sure.
money.
I don't know about the second one. Yeah, I'm
Invest,
stuck.
yeah, me too. Why you invest? To gain some money, to have some
Because
money
it's popular,
in
right? Everybody's doing it right. I don't
Make
know.
more
What's
money.
the second
The
answer?
second one is income.
Oh, yeah.
Oh,
True.
okay.
Yeah.
Well,
It could create another income for you.
You're creating another income stream.
We should
Yeah,
know that.
damn.
We'll be all right.
We're getting there.
So we create these income streams that never run out. What if I tell you there was an endless well of income that you could create with a lump sum of money?
I'd say it's too good to be true or illegal.
That's right. That's what most people say, right? Because that's kind of what we've been kind of brought up to believe.
Yeah, absolutely.
Like, this is just too good to be true. But the fact of the matter is, it exists where we could have a lump sum of money that grows over time. We could pull income from it every single month of our life. And the money has a guarantee to never run out on us.
That's
or
insane.
even if it runs out, let's say, you still are guaranteed to get that exact same amount every single month of the day you die.
That's the life benefit, which I appreciate you sharing.
Yeah.
The death benefit, though, because still most people are going to hear life insurance. So again, if me and sister C are a couple and she passes on, that policy then gets paid out to the beneficiary on on the plan.
Yeah, it does. Yeah.
So that's the death benefit.
That's the death benefit.
But if she doesn't pass on,
yeah.
a married couple could access that money
Yes.
whenever they need to and do whatever with that money.
Yeah. And let's look at the importance of the death benefit aspect too.
Yeah.
We can't just gloss over that.
No, it's huge.
Yeah.
I think what you mentioned was big because like we've all seen it. Like you said, the GoFundMe's,
Yes,
a
sir.
family member passed away or somebody's on the side of the street with they're doing a car wash to raise money. And that's tragic. You're obviously dealing with some loss and some grief, but now you're having to try to raise some funds to pay for funeral services, which gets crazy expensive for all of us that have already experienced having to bury a loved one.
Right.
That money adds up, and it adds up fast.
Quick.
You're talking about upwards of 15,000, as high as 40 in certain cases.
Right.
And that's been my personal experience with it. So I tell people all the time, there's some beauty in taking care of all those things for a family, especially if you have loved ones.
Absolutely.
And if you know you're going to pass on, they're going to be the ones that have to like take care of all that stuff for you.
Yeah.
If you already have things in place to pay for all that stuff and it be taken care of, you're now allowing your loved ones to just grieve for you.
Absolutely.
And they should be allowed that space to do that.
Yeah.
And the fact that you're thinking about them after you've passed on.
Yeah.
So man, that's huge.
There it is right there.
You said something to me yesterday when we were on the group chat, and it made me think, because it made me think about my financial behavior and how I need to shift my mindset.
Okay.
Right. So I think of self, right? And you said you got self, you have group 1, and you have group 2.
Yes.
Group 1 is family, right?
Yep.
Group 2 is collectors. They're
Yes.
millionaires, right? Group 2, that's your phone bill. You need your phone.
Yeah.
You got your internet. You need your
Internet,
Wi-Fi.
yeah, all of
you
it.
got your gas bill. You got to cook. You need your heater.
Yep.
Credit card
You got
bills.
your electricity bill
Yeah.
because you need light. That's a necessity that
Yeah.
you have right now at this moment. And that's a continuing cycle that you do every month, every year. Then you get back over to group 1, which is family,
Yep.
right? And that's just one circle
Yep.
that needs to be fulfilled, that you should be investing in, just like you do these collectors. But for some reason, wealth is seen as unseen, right? So dealing with people in our culture, in our community, we are, we kind of move off of congratulatory praises. Like,
Yeah.
oh, you got such a nice car. Oh, look at your house. It's
Right.
beautiful. Oh, your kicks are fresh. We
Right.
love that
Yeah.
in the moment praise, right? Because when you're building wealth, you don't get that praise at that moment,
Right.
Right? Because
No,
it's
'cause
unseen.
and
You don't
and,
see
and
it.
that's the
It's
delay.
ugly.
That's the delayed
You know what?
gratification is what you're talking about.
Right.
There's the instant where I'm getting all this getting all these things now, and it's gratifying now.
Yeah.
But then the delayed is like, I'm putting this money aside, and I'm gonna be able to get all that stuff later.
Right.
In terms of, hey, I'm not physically able to work anymore. I'm old.
Right.
I don't want to work anymore.
Right.
Right.
And I don't have to worry about anything because I put all this money away.
Right.
And
Yeah.
now I'm good.
Yeah.
That makes me think about what you said too, as far as your family leaving stuff behind.
Yeah.
Because you know who's going to give you that praise when you transition on, and you did put money in that cycle, right? And your kid goes and they have to bury you,
Right.
Right? And mom already took care of everything.
Everything.
You spoke to me about that.
Yeah.
Mom took care of everything.
Yeah.
The house is paid for.
Yeah.
Dad made sure the mortgage was covered.
Come on.
It's done.
Yeah.
So now when I transition, I made sure I dump back and invested into my family first, just like I did in these collectors who aren't giving me anything back
Right.
in the long run,
You
right?
talking about it. Yeah.
So now that's the importance of shifting your
That
mindset.
Okay, so then what do you tell the person that's single,
Yeah.
don't have family and kids, and they're like, this is not really important? Because I think about my mindset at 20. This, you couldn't have sold me on this. I don't think it's needed. I don't have a family or kids right now. What do you tell that person?
Okay. So this person has no family, no kids. What are they telling me is not important? Life insurance or
Life
investing?
insurance, investing, put money away for later.
Okay. Yeah, I would explain to them the concept first of the fact that we have to pay to die.
Oh, yeah, yeah.
I mean,
Someone's going to pay for it. Someone's going to pay to bury you.
Period.
Yeah,
This is just a fact.
yeah.
And then I'm going to explain to them or just give them perspective on, do you think the same way that you thought when you were 10 years old?
But you know, right? Nobody, yeah.
Nobody, right?
Right.
Yeah,
So you started evolving and changing over time.
yeah.
So there's no real guarantee that in the next 10 years or 20 years, you're going to be thinking like you're thinking now.
Right.
Let's communicate with that person.
Gotcha.
in 20 years. If we can project ourselves into that person, and start thinking about how that person would think and feel, and who knows what happens as far as family and different things.
Oh, right.
In the future.
Right.
And so now we're talking about the P5. We're just talking about proper preparation promotes peak performance. If we can prepare properly, then we can perform at our peak.
Can you say that again? That might have been a bar. Say it again, please.
Proper preparation promotes peak performance.
All right. That's the single person.
This is the single person.
How about the person that's in our age bracket, middle age, kids, but they're like YOLO? Because we know people like that.
YOLO.
You know what? I'm living for right now.
Yeah.
I'll worry about that when tomorrow comes.
Yeah.
But like, they maximize life right now. Because I envy those people. I wish I had that mindset.
Yeah.
You know? It's like,
I dig the YOLOs.
yeah, the weekend's here. Like, let's turn up.
It's on.
Like,
go.
let's go. We all the way up.
I have YOLO moments.
Right.
I ultimately feel like YOLO is not real. It's not true. I think it should be why led. Instead of YOLO, it should be you live every day.
Okay.
Because the fact is, yes, tomorrow I'm going to be alive again. If I'm alive, I'm alive again.
Yeah.
So now, what, am I going to just be YOLO every single day? Well, no, I'm living every day I'm alive, I'm living this day out.
Right.
And I know for sure that the decisions that I make today will have an effect on my tomorrow.
Yeah.
Period.
Absolutely. Absolutely.
So with that in mind, I have to actually now consider myself in 10 years, 20 years, 30 years. I have to.
Yeah.
Because I live every day that I'm alive, I'm thriving in that day. So I would just help the YOLO mindset put a different meaning behind it.
Okay. I like that.
How do we encourage the people that is our age,
Yeah.
right? And feel like it's too late. You know what? I'm 45,
50.
50.
Yeah.
I haven't really invested in any. I
put
don't have a 401.
no money away, right.
I don't have anything.
Because there's those out
and
there
now I'm
too.
getting scared.
Good
Now I'm
point.
getting a
Now I'm
little
getting scared.
worried.
Great question.
Now I'm
see.
worried.
I love that question.
Yeah.
And then my question is, okay, let's say we don't start today.
Yeah.
What's going to change and what are you going to be feeling when you're 70?
Oof.
Same.
Let's say we do nothing.
Nothing. Yeah.
Yeah, because now
Nothing
you're
would change.
70 with
Now
nothing.
you're
Nothing would
70.
change.
50, you're gonna be
Yeah.
wishing.
You're,
Like, I was
you're in
gotta
the
put
same
something away.
situation.
Yeah.
So at least try to put yourself in a position where you can at least come out with something. Shift your mindset.
Shift your mindset. Like, is it you? And I always ask questions.
Yeah.
Because if I tell them, it's like I'm pushing them. Statements push, questions pull.
Oh, I like that. Okay.
If I ask them a question and they come to the conclusion, they are
They're
more tied to
more
it.
receptive.
More receptive to it. So, is it better? Would it be better or worse if I start to save now? Sure, I'm behind, but is it better if I start now, or would it be better if I wait another 5 years?
Okay.
Right.
I have another one then.
Go.
What about the person that's like, I have nothing left over right now. We are barely making it. We're living paycheck to paycheck. We got these kids or even no kids.
Yeah.
Cost of rent's high. Everything's high.
Yeah.
I don't have any extra money to put away. I
space.
wish I did.
Yeah.
This all sounds beautiful.
Yeah.
You know, I
Right.
wish I was that responsible person.
Right.
But the reality is I don't have any. I'm barely making it right now.
How does that feel?
What do you tell that person?
How does that feel?
It feels horrible.
It's horrible, right?
Yeah, it's
Do you want
horrible.
to continue to feel that way?
No.
Would you like to change that?
I would love to.
Okay.
Give me the $1 million or the
Yeah.
yeah.
All right. So now we know how it feels. We know you want to change it. We know we have to change it.
Yeah.
Okay. So now we go back to the group 1, group 2.
Yep.
At this point, we're paying everybody else because what's happening is that people are having money come in and then money's going out.
Yeah.
And so everybody else is getting paid. And then when it's time for ourselves, our future, our family, we say, oh, I ain't got nothing.
Oof.
I'm tapped out.
I'm tapped.
I say, let's reverse that. So now when the money comes in, let's pay ourselves first. And then we'll worry about everybody else after. Maybe we come to one of them and say, I'm tapped out.
Absolutely.
gotcha.
Talk to me.
Because they already made it.
No, for real.
And guess what? I already been through it enough where, you know, being an entrepreneur, I don't have a guaranteed check.
Right.
I got to figure it out all the time. So I've been in those situations where it's like, mortgage, I ain't got it.
Yeah.
T-Mobile, I ain't got it.
Yeah.
You know, and I'll call them. Here's my situation.
Yeah.
You'd be surprised how they work things out. But the fact of the matter is, we need to switch our behavior pattern around. We need to change our paradigm. We have to if we're going to shift. So what the wealthy do, and I'm just taking the breadcrumbs from the wealthy from what I've learned along the way.
Yeah.
Money is coming in, 10% off top goes to some type of giving away, because it's an abundant mindset. To give puts you in an abundance mindset. Because if you're giving it, you're saying, I have plenty more.
Okay.
Right? That's what you're telling the soul. Right? I'm just getting a little philosophical here, but it is a feeling.
Or holistic. You said
it's
holistic.
our holistic approach.
Yeah.
Exactly. And then the other 10%, you take it and you invest it. And
your future self. I'm paying future me first.
In future me
first.
There was a quote I read. It said, the poverty mindset gets money and they spend it.
Ooh.
The middle class mindset gets money and they save it.
Okay.
The wealthy get money and they invest it.
Gotcha.
Saving it, if I put it in my drawer, I'm actually losing money.
Okay.
How in the world is that? Because
you're missing out on potential gains if you're investing in something that's the dollar is becoming less and less valuable. Inflation is going up. The value of the dollar is coming down. If it's in my drawer, the value of it is losing. If you have it sitting in a savings account, you're losing value. If your money is not growing, it's dying.
Yeah.
And so I need to invest my money so that it is working for me and my future.
That paradigm shift that you're talking about and shifting your mindset, it's probably one of the hardest things on the planet to do.
Absolutely.
Agreed.
So you're having this conversation and you're hoping that they understand this thing, but then how do you not fall back into how I've always done it?
Yeah.
Because
in the back of their mind, that's how they feel.
But that's with us too, right? It's very easy to fall back into that with
is.
anything. It's like, hey, I'm trying to change my lifestyle. I'm trying to do things a little bit different. It's so easy to slip back into like your comfort zone or the things that you enjoy doing, all the luxuries you love.
Bro, you are spot on.
So if that happens with your clients, or, you know, say me and Sister C start investing, but then we're starting to slip off and it's like, like, how do you bring them back? How do you get somebody to say, hey,
man,
like, it might not seem important, but 20 years from now, that 60-year-old C is going to be so happy 40-year-old C put this money away.
It's the behavior, right?
Yeah.
Nah, that's such a good question, man. I love the way y'all dig in. Because one, what I do is first of all, we need community. Right?
Absolutely.
Talk about it. Please. Talk about it.
That's why we're here.
We need community.
That's exactly why we're here.
And if you break down community, communication and unity.
Yeah.
Right? So we need to bring those two together. And it has you start surrounding yourself with the like-minded individuals.
I love that. So important.
That's just important.
So important.
You want to get in shape, you need to hang around people who
that are in the gym. Shape. Right. Yeah.
You know, you want to become wealthy, you need to hang around with people who are whatever the case. So we need community. And one of the things that I do is I try to do at least annual reviews.
Gotcha.
So we can come back to it. Tell me what you invested in when we got started.
Gotcha. Yeah.
Right? Can you explain it?
Right.
Because most people they forget after a week.
Yeah.
Yep.
Right? And so the other thing is we do offer a weekly community that these people can be a part of.
Oh, I love that.
Where they could tap in on Zooms from wherever they are on the planet. They got access to a phone or a computer. They could tap in and at least hear and be around people who are talking about these concepts in a high vibe plug.
Yeah.
In a high vibe environment.
Yeah.
You know, where you start getting excited about it again.
Oh, I love that.
Because an example I love to give is when we talk about the mindset of all.
Yeah.
The all is mine. All is mine. I believe that our belief system is what governs our life. Right? So if a person is eating pizza every day.
Yeah.
And that's what they love. And you try to introduce vegetables.
Yeah.
Right. And they're like, Man, get that out of here. I don't want no vegetables. Get that broccoli
Yeah.
out of here. I hate the way it smells. Whatever.
Where's the pepperoni?
Yeah, give me the pep
Where's the
Yeah.
on my pizza and extra cheese.
Oh.
Right? That's a form of thinking.
Yes.
That person goes to the doctor and they say, hey, if you keep this up, you're going to die
Absolutely.
soon.
Yeah.
And you will not be able to see your grandchildren, let's say,
Yeah.
this individual. Now, immediately, they have had a complete shifting of their thoughts. Immediately.
Yes. Yeah.
Right? Now it's like,
Because there's something
Whoa.
valuable they're going to lose.
Yep.
Maybe your most valuable thing in your life.
maybe your most valuable
Right.
thing.
Yep.
So now it connects,
Yes.
right? Now, they are the thing switches where they're looking for the vegetables.
Yeah.
Mm-hmm.
And then when you bring them the pizza, they connect that with, man, I'm not going to be able to see my grandkids.
Right.
So now it's like,
Yeah.
yuck.
Yeah.
Get that disgusting cheese away from me.
Right.
So what we're talking about is like making connections with people, right?
Community, I love
That's
I
where
love
the
that.
holistic.
Hey, listen, and that's huge. Not to cut you off. I'm
Yeah.
sorry, but he's right about that. See, you have to cut your YOLO friends out your life. That's all he said. I gotta cut mine out too. So if any of my YOLO
Right.
friends is watching it, I can't hang with y'all no more.
You're right. He's right.
Yeah. You know what I like? So you use the FIN term, the financial
Yeah.
independence number. You know what I found recently too. There's a FIRE community. It's a financial independence retire early.
Yeah.
So there's a group of people out there. You can find them on like Facebook and Instagram, Discord, all these groups.
Yes.
And this entire community is dedicated to people that are trying to retire early. They're trying to put that money away. So when you talk about that mind shift switch,
Yep.
it's been hammered home, and we've been programmed to think that you get a job, you work until 60 something, and you retire. These people realize that they have control over when they retire. I don't have to wait till 65. If I'm smart with my money now,
Yep.
I'm moving that number down to 50s.
Come on.
Some of them have been able to move that number down to 40.
Let's
That's
go.
beautiful.
They were like
what I'm
at
talking
20, they've just been put money away because they knew, like, I don't want to work at 40.
Yeah.
Right.
I don't want that alarm to go off. I want
Yeah.
to lay in bed,
Right.
wake up when I wake
Yeah.
up.
Right.
Yeah.
And so it's community's huge. Like, I love that. Like, it's important for all of us, especially if you're trying to make a change. Like, you have to find your people, find a
have
network,
to, man.
Yeah, you
get
do.
you a
And
solid tribe.
You
do.
start questioning everything.
Yeah.
Yeah, you
Right.
do.
A brother I went to school with, Marcus, I sat down with him a long time ago, and he told me about the book, The 4-Hour Work Week,
Okay.
and it completely shifted my mindset after reading that book.
Okay.
And after he told me, I didn't touch the book until maybe 4 years after.
Okay.
But when I read it, I was like, it just opened my mind to a whole new way of thinking. Because as
Yeah.
you mentioned, we have been programmed to go to grade school, graduate, go to college,
Yeah.
get your first credit card in college and start getting you into debt. Let's get you some school loans so you can
Right.
get into more debt. Then let's get you out of school. Let's get you a job that pays significantly less than your student loan.
Yeah.
And then let's get you married. Right? Let's pop out some kids.
Yeah.
And then let's get you in this job that you hate, and you'll be getting up every morning to go to, slugging it on the freeway, and you're drinking coffee to keep you alive. And then
Talk about it.
Then let's get you that minivan later on. And let's get you
Not
that
the mini-
mortgage.
not the
Not the
minivan.
Right?
Not
And
the
if we break
minivan.
down mortgage, I'll never forget the breakdown of this. When you tie mortgage, when you break that word up, mort, when you think of mort, what do you think about?
Mortician.
Mortician, mortuary, death.
Yeah.
And you think of gauge, you're talking about a pledge. So you get a mortgage, you get yourself a pledge till death, right? And so they lock you in there for that 30-year fixed loan that you never ever pay off, right? And so we're going to get you there, and then we're going to keep you working at this company for the next 20, 30 years until you're upset like the guy that we talked about on the meme, and then they
Right.
take away your pension, and then you're just
Right.
stuck, and then you're at Walmart
Dang.
when
Bars?
you're 70.
Bars?
Man.
That's the program.
Not greeting people
That's
at the
the
Walmart.
Glen.
Not greeting people at the Walmart.
Talk to
We got to
him.
get people out the
As a
Glen,
senior,
bro.
Talk to
yeah.
him. Talk to him.
Wow.
They clone Tyrone. You know,
Yeah.
so like and so now once we start changing our paradigm,
Yeah.
we're talking about this FIRE group, they're talking about retiring early, man. If we start thinking like that, and I mean, there are definitely cultures
Yeah.
that have been moving like that
For you. Yeah.
for a very long time.
Yeah.
So we start putting ourselves in a situation to be I don't even want to say retire, because some people it's get yourself financially independent.
Independence, where you
Yeah.
can do what you want with your time.
There you go.
Absolutely.
That's it, man.
And that's it. It's freedom.
There was
That's it.
I read this book, The Psychology of Money, and that's the thing he talked about. It was the first time I ever heard anybody give a definition of freedom where I thought it was accurate.
Yes.
He said it's the ability to do what you want, when you want, with whomever you want, and you don't have to worry about finances.
Come on, man.
Ultimate freedom.
That's freedom.
Preach.
Man, well, look, I appreciate this conversation. I know it's like life insurance. It also seemed like a lot of wealth building, but man, there's a lot of knowledge that we could tap into with you, and just like, man, it could be like a second show maybe, man. It's like,
I'm always willing.
I'm sure we'll have questions.
Yeah, and I think a lot of people,
how to sign up,
all of that. Like, how do people find you?
Yeah.
Where can they reach out? Or
so definitely you can email me at kellington.rfm. So that's Roger Frank Mary, kellington.rfm@gmail. You can call me, text me, 310-630-7165. I also communicate through Instagram, and that's at Mr. Rara the Great, MRRARA the Great. And so, yeah, that's the way people can reach out.
And we'll try to put that on there. One last thing I just want to say, it's like we're inundated with information every day. And so there's going to be a lot of, like you said, we hear something and then we forget it in a week, right?
Yeah.
But the tragedy of that is like, it's so easy for us to access information now. So even if somebody tells you something and it sounds good, always do your due diligence.
Absolutely.
Facts.
Go fact check for yourself.
Yes.
Yeah.
And then if you have further questions, man, reach out to Ra, or you can even reach out to us and we'll connect everybody to Rasheme.
Yeah.
If they have more questions.
Absolutely. And if you have somebody in your corner that knows finances, knows money, get connected with them.
I love it.
Connect with them. Connect with Ra. That's the guy.
and have those uncomfortable conversations with family. See, like,
oh yes,
like if right now, if you sit in the room or near somebody that you love or a loved one, and it's like, hey, if I pass away tomorrow, like, how are we gonna pay for everything? Or what's gonna happen to the house? Or what's, you know what I mean? Like, we have to.
How are we gonna move forward?
Question.
Yeah, we have to be able to have those uncomfortable conversations.
And
man.
if you feel uncomfortable having a conversation with just your spouse, call Sheen.
Holla.
Yeah.
You know, he'll help you, both of you, through it, so you don't feel uncomfortable just having that conversation with just the one of you.
Yeah.
You know,
mediator.
it is an uncomfortable conversation.
For sure.
You know,
but you know what's an uncomfortable conversation?
Go ahead.
Is calling and having to ask family members for money when someone passes. And it's uncomfortable for both people. When you get the call and you're like, I ain't got it.
Yep.
And when you're having to make the call to ask for it.
Yep.
Yeah.
So pick your uncomfortable conversation.
You're uncomfortable. I love that.
Man, it's milestone episode, Sister C.
Yes, sir.
So we got more people coming, but man, we appreciate having you so much, man. This was great.
Thank you.
Yes.
Thank you for having me.
So y'all be sure to follow us on YouTube, Just Two Scorpios. We're on all listening platforms, Apple, Google, Spotify. Stay tuned for the next episode, baby.
We out of here.
We out of here.
I appreciate you.